So I know that I'm seeing some glazed over faces. You all just ate. The coma is setting in. But we have an exciting panel right now talking about housing market reality, something I think all of us are very in tune with in the economically stressful times in which we live. If you haven't thought about housing realities recently, I envy you. So we're going to be talking about various aspects of that and how it plays in with our lives. Our first panelist is Jeff Smith with the Institute for Housing Studies at Depaul. And I'm going to ask him to share a little bit about what he does at the Institute and how that feeds into what he's going to be presenting for us today.
Good morning, everybody. Thanks, Taylor. My name is Jeff Smith. I'm the Executive Director at the Institute for Housing Studies at Depaul University. We are an applied research center based in the Dry House College of Business, specifically in the Department of Finance and Real Estate. I don't know how my slides are going to come up here. Do I need to do something to play? But is this working? Is it okay? But what I was going to talk about today with as part of my presentation is just looking specifically at some rental housing affordability trends in the city with a focus on a particularly important component of the city's affordable rental stock, those rental units found in 2 to 4 unit buildings. So real quickly, this is a map of Chicago broken out into an obscure sort of set of geographies called pumas or submarkets. What the map shows is, in this case, areas that are lightest color are those with the smallest share of rental housing that would be considered affordable. Affordable is in quotes because we're not using sort of an administratively technical definition of affordability, but rather a broad definition of lower cost rental housing. And so you can see a pretty common pattern where the share of units near the lakefront or on the north side, smaller share of those units are affordable. Areas in the south and west sides, a little bit higher share of affordability. Some basic indicators of how we got there. This looks at how some affordability indicators changed between 2012 and 2019. So what we see citywide is the share of rental units that were affordable or lower cost decreased by 5.2 percentage points. At the same time, the share of renters that are lower income also decreased by 4 percentage points. And then the share of renters living in higher cost units increased by 2.5 percentage points, right? So what that's a story of is lost affordability, likely pushing out a lot of lower income renters, and the lower income renters that are staying in the city are living in higher costs, more likely to live in higher cost units. And so when we look at the map of where we're seeing the most lost affordability, that's the dark blue areas that saw the largest percentage point decline in the share of rental units that are affordable. Those are areas largely on the north and northwest side of the city. We can correlate that in many ways. If you just look at this map of market strength or market affordability of like for sale housing of 1 to 4 unit properties, dark red areas are areas that are in the most expensive third of sales prices in the city, green, middle third, blue, lowest third. So those are high, moderate, and lower cost neighborhoods. A lot of indicators really align with these market typologies. So for example, looking at rents, if you control for inflation, rents between 2010 and 2019 in high-cost neighborhoods increased by about 20%, whereas rents in lower-cost neighborhoods adjusting for inflation actually declined a bit in that window of time. Same period of time, the housing supply also changed in those high-cost areas. You saw a 5% increase in total housing units and about a 4.5% loss of total housing units. And you see this moderate cost area, which I haven't really talked about because it's pretty stable in many cases. That's actually a really critical and important part of the overall housing market for various reasons, something to continue to pay attention to that I'll get into later. So when we look at why, where is the housing supply going and the affordable supply going? This is forgetting neighborhood typology for a second, where is the city seeing an increase in types of housing by type of buildings? So single family homes, 2 to 4 unit buildings, 5 to 49 unit buildings, 50 plus unit buildings. Where is the city experiencing increases in the number of units or decreases in the number of units? We see that there's a big increase in those 50 plus unit properties, rental properties in particular, and actually a pretty big decrease in 2 to 4 unit properties. And then when we break that down by, again, this market typology, we see that high-cost areas really saw a big increase in those larger multi-unit properties. So 32,000 unit increase in units found in those high cost areas. So a big growth in those likely new construction multi-unit properties. What you see across all areas, though, is a decrease in 2 to 4 unit buildings. So in all market types, we're seeing a loss of this 2 to 4 unit housing stock, which is important. The 2 to 4 unit stock, really is somewhat unique to Chicago, though it's found in cities across the country. But in Chicago, it makes up a really substantial part of the neighborhood housing supply in many communities. Up to 70% or more of housing units in some neighborhoods are found in those 2 to 4 unit properties. So it's very common. It's very iconic in many places. It's a very older type of housing. Average age is 108 years old. And to that extent, it makes up the backbone of the lower cost housing stock in many neighborhoods. So typically in any neighborhood you go to, if you're looking for what many people call the naturally occurring affordable rental stock, it's going to probably be found in those 2 to 4 unit properties, or in smaller, like 5 to 16 unit properties. So that we, from various research that IHS has done and that others have done, we know that 2 to 4 unit buildings tend to offer lower rents. They tend to provide family-sized units, meaning they have multiple bedrooms. They serve lower income households. They often provide ownership opportunities for households of color. And they tend to be owned, if they're investor properties, tend to be owned by smaller scale landlords. So for all these reasons, they're fairly unique. And one of the concerns as they get lost, as we see that they're being lost in the data, is that once you lose those units as relative affordable housing or just housing in general, they're not really likely to be replaced because, as you saw from the earlier data, you're really building single family homes and larger multifamily properties, and you're not really building a lot of these 2 to 4 unit properties. And if you did, they probably wouldn't be affordable. So a lot of the work that we've done is try to understand, what are some of the drivers behind the loss of this particular housing stock in different neighborhood contexts. And this is where we get back to high, moderate, and lower cost neighborhoods. In those higher cost markets, you're really seeing changes in demand for housing, really demand for single family homes from higher income households who really don't want to live in small apartment buildings or even family sized apartment units. And so that puts pressure on the existing housing stock where you don't have a lot of room for new development. So you see investors, developers, even owner-occupants turning those small multi-unit buildings into single-family homes, often very high-cost single-family homes, where you see them demolished entirely and replaced with million-dollar single-family homes. So that's sort of what is behind a lot of the deconversion or conversion of those 2 flats into single-family homes. In really strong real estate markets, you're seeing that demand for single-family housing from higher-income households. In those moderate-cost markets where the 2 to 4 unit building is functioning, in many ways as it's intended to, as affordable, unsubsidized, low-cost housing for families, there still is vulnerability. They're affordable, but not by virtue of any direct subsidy, but by virtue of just the market. If the market changes, that affordability goes away. So that really puts potential pressure on existing owners who may want to sell, because that's what you do when you own a house. At some point, you sell it. But that sale can trigger lots of different potential outcomes for that property, including erosion of affordability. So paying attention to those long-term owners in those moderate cost markets is important. And then in lower cost areas, you still have a lot of 2 to 4 unit buildings, but the legacy of the foreclosure crisis, disinvestment, high levels of vacancy means that those properties are often more likely to be at risk of being abandoned and demolished and just lost from the stock entirely. So we did some data to try to determine if this is all right. And so essentially what we did was look at this. This is a chart showing the loss of 2 to 4 unit properties in different neighborhood market contexts between 2013 and 2019. Essentially what we did was looked at data from 2013 from the Cook County Assessor, looked at properties that were classified as a 2 to 4 unit building, fast forwarded to 2019 to see, was that classification still the same? If it wasn't, what did that classification change to? And the ones that changed were the ones that were lost. And so 4.2% of the parcels that were 2 to 4 unit buildings in 2013 were no longer 2 to 4 unit buildings in 2019. Looking at the market strength, market typologies, in high cost areas, 7.1% of those parcels were lost. 2 to 4 unit buildings in 2013, 7.1% were not in 2019. Lower cost areas, that loss was 3.5%. Getting into, again, taking a step back, some of the pathways that those properties took to being lost. The most common was that dark blue, where the property was 2 to 4, became a single family home in 2019. 47.5% of those lost 2 to 4s were became single-family homes. Another 20, almost 30%, were replaced by a non-residential land use, which is most commonly a vacant land. And then looking at, again, the specific outcomes and how those outcomes vary by market type, the far left set of bars show that 79 or 78% of the parcels that were lost to single-family homes were found in high-cost neighborhoods. So really, that single-family conversion was most likely to be a phenomenon happening in higher-cost markets due to some of the demand effects that I mentioned. Flip side, properties that were lost to demolition were most likely to, and a non-residential land use are most likely to be found in lower-cost areas, where 65% of those parcels were located. So this is a map specifically looking at the census tracts where you saw the largest number of lost 2 to 4 unit buildings. You see that's a largely north side phenomenon with little pockets in Bridgeport and Bronzeville. On the south side, a little pocket in Woodlawn, but largely areas on the north side of the city. So when you look at the community areas that represent the highest level of this kind of deconversion activity or conversion activity, 50+% are really found in those top 5 community areas: North Center, Lakeview, Westtown, Logan Square, and Lincoln Park. One of the things that we've been really looking at is we're calling a price gap, right? So the gap between a single family sales price and the 2 to 4 unit building sales price. So this chart tracks that. The dark blue line is the median sales price for single family homes. The lighter blue is the median sales price for 2 to 4 unit buildings, 1997 to 2021. You can see starting around 2004, that gap was pretty wide, and it has continued to get wider. So we think that that's a predictive or leading indicator of conversion pressures in different neighborhoods where single-family homes are more highly valued than 2 to 4 unit properties. And then if you look at this chart that I'm sure no one can read, but the whole point is really just to get a sense of the colors. Light blue areas where are in the top 10 of conversions to single-family homes. Dark blue, not in the top 10. So you can see that all the areas that had a higher median sales price for single-family homes were also in the top 10 for conversion activity, right? So that's what we think is a fairly significant correlation between the relationship between single-family and 2 to 4 unit sales prices, and an indicator of risk to the 2 to 4 unit housing stock. So trying to think about how to get ahead of some of that pressure in some neighborhoods that maybe aren't in the top, but still experiencing that pressure. Again, I mentioned long-term owners. So this is a map of the number of 2 to 4 unit parcels where they've been continuously owned by the same person since at least 2000, so about 20 years. And you see that, and this is just higher moderate cost neighborhoods, I believe. So you see that there are certainly significant pockets of those neighborhoods in neighborhoods on the northwest side of the city, southwest side of the city. So I think if we mapped out the entirety of the city, you'd see again that there are pockets of neighborhoods where you do have a lot of long-term owners. And really those long-term owners are where, when thinking about strategies to preserve that affordability and to preserve that type of housing, you might want to think about targeting those neighborhoods where you have a lot of those long-term owners. One type of long-term owner might be an older adult long-term owner, and this is looking specifically at neighborhood Greater Grand Crossing. You can see total number of 2 to 4 unit parcels. 1,000 of those 2 to 4 unit parcels in Greater Grand Crossing were owned continuously, so that's the largest of all the different types of ownership. And that light blue is with a long-term owned properties that also have a senior exemption. So thinking about seniors as a particularly important component of the housing stock for many reasons. But one, in this particular example, is that they may be looking to sell at some point because it might be difficult to age in place in the 2 to 4 unit property. So again, thinking about ways to use data to narrow down on ownership typologies and thinking about how to reach those owners for different types of strategies to preserve and stabilize their existing housing situation. And then just finishing up with sort of areas at the bottom, in terms of, at the bottom, areas that have the highest share of demolition, so parcels that went from 2 to 4 unit to vacant lots. You can see a lot of areas that on the south and west sides of the city: Englewood, New City, West Englewood. Ironically, Lakeview, Lincoln Park, Westtown, not on the south and west side of the city, not what one would consider necessarily a disinvested neighborhood. And what that is really people, higher income folks will buy a lot, demo it, and just kind of hang on to it for a while because they don't want to pay the property taxes essentially on an improved lot. So they'll demolish the parcel, demolish the improvement on the property, so they just pay taxes on vacant land. So in some of those areas, that's what's happening. But again, this is, the pattern of disinvestment in the city. You see that in the pattern of units lost to demolition. And this is just a map to introduce sort of a partnership that IHS has with the city and some of the agencies that work with the city through their market recovery program. Won't go into what MMRP is, but essentially the city works with a lot of grassroots organizations and a set of communities to gather information on the neighborhood housing stock and ostensibly to help stabilize vacant land and invest in vacant properties and get people living in vacant properties. And so some of the work that we've done with those folks is to help them understand a little bit about the dynamics of vacant properties and parcels in their communities. So with that, I will stop and pass it to Daniel.
Cool. Thank you, John.
I don't know if there's a way to turn this off or...
Thank you for that. That was very encouraging. Thank you. We're going to move on to Daniel Hertz. Some of you may be familiar with his name due to a certain book he wrote a while ago about gentrification, but now he works for the Chicago Department of Housing, and he'll share a little bit about what he is going to be doing and how that's influenced by his work.
Cool. Thank you. Good afternoon, everybody. So my name is Daniel Hertz. I am Director of Policy and Research on Legislative Affairs for the Chicago Department of Housing, where I've been since 2019. And I'm going to talk about two laws that were passed just a little bit over a year ago that I think offer a practical, with a nod to the reality part of the title of our panel, a practical and also importantly a partial policy response to many of the things that we've been hearing about today, including in Jeff's presentation just now. And I won't belabor this too much because I think some of the previous panelists have talked about this, but they also respond to a very particular interaction of market dynamics and regulatory situations here in the city, namely that Chicago, as you've heard, has a lot of 2 to 4 unit buildings. But many of those, in fact, I would love maybe Stephen Vance knows off the top of his head, many of those are in single family only zones. So I, in fact, live in one of those. I live in a 4-unit building that was built roughly 100 years ago. About half of my block is 2 to 4 unit buildings. The other half is sort of larger, older walk-up apartment buildings. Every single parcel on my block is zoned single family home only. That was downzoned, I believe, in the 80s. Anyway, so you have the situation where you have this extant 2 to 4 stock, can't replace it now under current zoning, and the other piece, the sort of market dynamic that Jeff just talked about, which is that in many neighborhoods, single-family homes are actually worth more money on the market than a building with 2, 3, or even 4 units in it, which obviously means that even if you have zoning that allows for multifamily housing, the market will often push towards de-densification and towards single-family properties. Okay, so why? First of all, why does this sort of matter? Why does the Chicago Department of Housing decide to take on policies that are trying to address that issue? Again, not going to super belabor this because you've heard a lot about it. 2 to 4 unit properties are an important sort of level of density for supporting just neighborhood retail, neighborhood institutions, transit, ecological issues, all that. They're an important source of naturally occurring affordable housing. The one thing I'll add, which I think hasn't been talked about, is, we often talk about 2 to 4s in the context of older buildings, usually at least, several generations old. But even new construction, 2 to 4 unit buildings, have really important advantages over new construction single family homes, especially in these really high cost areas. So this is not a probably academically citable number, but based on some data that we looked at of available new construction units in a high cost North Side neighborhood, we found that the median apartment in a new construction, meaning over the last 3 years, new construction 2 to 4 unit building, required an income of about $100,000, a household income of $100,000 in order to afford that price to live there. Now, $100,000 is nobody's idea of low-income housing, but it is realistically an amount that a household of, say, 2 CPS teachers might make, right? By contrast, the median single-family home in the same area, same exact neighborhood, that was built in the last 3 years required a household income of just about $500,000 in order to afford. $500,000. And of course, this is in a neighborhood where the current zoning is in fact single family only. It is in fact currently city policy that the only things that can be built there are things that you need to make $500,000 a year to afford. So this is why we like 2 to 4 unit buildings. So two laws, as I said. The first one you've heard a little bit about already is the additional dwelling unit ordinance. Everywhere else in the country calls it accessory dwelling units. We call it additional because, I don't know. And essentially what this ordinance did was it allows at least one more unit on every parcel covered by the ordinance to be added to the existing building without without regard for what the underlying zoning is. And I say at least one unit because actually in larger buildings of at least 5 units or more, the calculation is you can increase the number of units by 1/3 of what the legally established number of units on the property is, which means that in what's a fairly classic type of a basically a double 3 flat, like a 6 flat, you could add 2 units. In an 18-unit building, you could theoretically add 6 units and so on. And you can do this without adding more parking, which is often the sort of physical limiting factor of adding density. There's a whole bunch of other provisions, which I won't get into the details of unless somebody wants to ask. So initially, we at the Department of Housing, together with the Department of Planning and Development, Department of Buildings, worked with the Urban Land Institute, which had convened dozens and dozens of stakeholders for over a long period of time to talk about, what should an ADU policy look like in Chicago. We put together a proposed ordinance, presented it to the city council, and had a subject matter hearing about it, which we sort of imagined would be largely just educational. And in fact, it turned out that there were many, many concerns in the city council, a lot of nervousness about what it would mean to allow more housing, more renters, more people on their blocks. And so what ended up happening, although the initial ordinance covered the entire city, a substitute ordinance introduced a few months later established 5 pilot zones around the city on the north, northwest, west, south, and southeast. And essentially said, okay, ADUs are allowed in these areas. It was designed to be, the pilot zones were designed to be a wide swath of different types of neighborhoods in terms of the housing stock, in terms of demographics, in terms of the market conditions. So we can say, all right, we'll see what happens, see how this behaves, and then we can use that to inform eventually a larger, potentially citywide policy. So it's been about a year. The ordinance went into effect May 1st of last year. And in that time, we have seen hundreds and hundreds of people applying for ADUs on their property. In fact, we've seen, and to go slightly into the weeds, it's a 2-step process. You have what's called a pre-approval to the Department of Housing, where we basically say, yep, you check the boxes, you're in one of the areas, we'll review if you need any affordability. It's pretty low barrier, but it does need to be done. And then once you've gotten a pre-approval from the Department of Housing, you can go get your building permit like anything else. So we've had over 300 approved pre-approval applications to the Department of Housing in just about a year. We've seen them certainly disproportionately in some of the higher cost markets on the north and northwest side, but I'm really happy to say that we've seen at least one approval in each of the 21 wards that are part of the ADU pilot areas, right? So this is something that really is, there's interest in this everywhere around the city that it is allowed. And I can give a few numbers about what we've seen out of that. So out of the 300 plus pre-approvals, 80% of those are for ADUs in 2 to 6 unit buildings, right? Which is absolutely one of the goals, that this is a really low a way of lowering the cost of creating or maintaining, adding to this sort of low density multifamily housing stock in Chicago neighborhoods. And in fact, we've seen that's in fact what people are using this to do, is they're using this to invest more in this type of housing stock. Another data point that we were really encouraged by is that half of those pre-approvals are for owner-occupant buildings. Again, we see at the Department of Housing, particularly in higher cost areas, see a value to these units, even if they're not in owner-occupied buildings, because we know that they will tend to be more affordable than other housing on the same block in the same neighborhood. Help add housing stock in general back to the neighborhood. That's a good thing. But it's also great that owners are using this program, are looking to use this program to add a unit for extended family, maybe to move into themselves if they want to downsize on their own property, or even just to earn a little bit of extra income as a landlord to pay property taxes, to pay deferred maintenance, what have you. Another thing which is particularly relevant for this conference is that 2/3 of the ADU applications have been in single-family zoned districts. So much of, if not most of, the ADU pilots are in Chicago, RS2 and RS3, which would only allow single-family zoning, but for the ADU policy, right? And so we really are seeing that there is this interest and this ability to add what will be unsubsidized, for the most part, unsubsidized low and moderate income rental stock in areas that otherwise don't allow it. And so we are really encouraged at the Department of Housing in the first year result of this program. And in fact, we've been hearing from people outside of those pilot areas as well, both just homeowners, property owners, as well as many aldermen. I won't name any names, who may have been skeptical in the beginning and are now seeing like, hey, you know what, this is not ruining the neighborhood, and it's something that like actually my constituents want and see a use for and see as something that is beneficial to their community. So that sort of is one of these policies. The other one is maybe a little bit more unique to Chicago. And that is the anti-deconversion laws that we passed, or that the city council passed at the beginning of last year. So you've heard a lot so far about deconversions, the problem of people either doing a gut rehab or just straight out demolishing and reconstructing 2 to 4 unit buildings as single family homes. It's a loss of NOAA property, it's a loss of density, and it generally means that only much higher income people can occupy that piece of land than if it had remained a small multifamily building. And we've been obviously aware of this problem for a long time, thanks to groups like Institute for Housing Studies, and as well as neighborhood organizers in places like Logan Square, who have been sounding the alarm on this sort of issue for years. They were Logan Square, and I should say definitely also Albany Park with Communities United. And so working in large part with many of these organizations, the Department of Housing last year crafted an ordinance, actually 2 ordinances, that applied to 2 particular areas of high concern. One of them was around the 606 trail on the northwest side through Bucktown, Logan Square, and Humboldt Park, in an area that was already very rapidly gentrifying, and where an investment of a public rail-to-trail conversion sort of galvanized additional investment, including more of these teardowns and deconversions. And then the other one was the Pilsen neighborhood on the southwest side, historically one of the hearts of the city's Mexican-American population, which has also been experiencing increased real estate investment, gentrification, displacement of low-income people. And, what we came up against was precisely the issue that Jeff raised earlier, which is that even if you zone, many of these places are zoned single family, particularly around the 606 trail, but that even if you zone for multifamily, particularly, low density multifamily 3 or 4 flats, the market may push for single family homes anyway. And so the question was, what tools do we have at our disposal to push back against that? And essentially what we created was zoning provisions that for the first time in Chicago, not totally unprecedented nationwide, but for the first time in Chicago, set a floor as well as a ceiling to density in these areas. And so essentially, the pitch was, just like you need a upzoning to build a significantly denser building, because it may have effects on, may change neighborhood character or whatever, there should also be floors, right? You should also need a zoning change in order to reduce the density, because in fact that is just as harmful and just as significant a change to the neighborhood character. And so City Council did pass those two ordinances, again, one for 606, one for Pilsen. And in the year since that has been passed, we have in fact tracked, I don't know, Stephen, if you can tell me if since last time I looked at, used Cityscape to do this data sleuthing. We have in fact seen 0 deconversions in those covered areas, down from a fairly rapid pace prior. And yeah, thank you. Which is incredibly exciting, because I think it means that for the first time we have a tool that we can say, hey, look, we tried this in a couple areas, and to the extent, what it was supposed to do, it's not a one-stop, it did not completely end displacement or gentrification in these areas, but the thing that it was specifically supposed to do, it did. And I'll just briefly say that also went along with another piece that local organizers were very interested in, which was a fee, a surcharge, importantly a surcharge on demolitions of residential properties, right? We've also seen somewhat of a decline in demolitions in those areas as well. Wrapping up so that we can continue with the panel. What I want to say is we have, although there's many, many challenges here, and many sort of unique challenges that I think, as many people have said, simply getting rid of single-family zoning won't necessarily directly address, including this issue of deconversions. We have established in Chicago some zoning approaches that do address these challenges and do seem to be working. I think the work now on our part, and for everybody who cares about these issues, is think about, all right, where else and how else might these be beneficial to neighborhoods across the city? What are the next steps in the places where they already apply to continue to provide safe and affordable housing for everybody? And of course, a lot of that is going to be, focused on continuing to support the most vulnerable people who we know are not necessarily going to be protected by things like this. People who need very deep subsidies in order to live affordably. And so, a lot of our work at the Department of Housing is now also looking at, how do we come in and bring more off-market housing that can also serve those populations as well. Somebody mentioned very briefly the historic investment that was announced in December. And so that's sort of where we're going from here. And with that, I'll turn it over to Rachel.
Thank you, Daniel. Yes, finally, not least, we have Dr. Rachel Weber, Professor of Urban Planning at UIC's College of Urban Planning and Public Administration. What can you tell us about how your research and studies feed into this topic of market realities in housing?
Well, I'll tell you a little bit, not everything. I mean, can you guys hear me? Am I mic'd? Good. Now, maybe just put a little heat lamp over me so I won't be shivering as much as I am. So in my short amount of time, I'm going to talk about something a little different from what my two panelists discussed, because my research tends to focus on commercial real estate, and included in commercial real estate, in addition to industrial and commercial, sort of retail space, I do look at multifamily housing, but I look at really big multifamily housing. So not the 2 to 4 flats, but the over 50 investor-owned kinds of multifamily development. So what I'd like to do is just sort of present some what I call sort of provocations about my side of the realities of the housing market that I think challenge our understandings about the relationships between zoning reform, housing supply, and affordability. So zoning and land use regulations, as we've heard all day, and especially at our lunchtime presentation, have been singled out as a root cause for the limited supply of housing and therefore the lack of affordable housing. The so-called laws of housing supply and demand suggest that removing regulatory barriers and increasing the supply of new housing units will cause rents and prices to deflate. And you find these kinds of assumptions echoed by supply-siders like economist Ed Glazer, who says, and I quote, "Simply put, the places that are expensive don't build a lot, and the places that build a lot are not expensive. Growth and not height restrictions or a fixed building stock keeps spaces affordable and ensures that poorer people and less profitable firms can stay and help a thriving city remain successful and diverse." Now, in contrast to this release the cranes kind of dogma, I would argue that, first of all, whether zoning reform leads to more supply and whether new supply leads to lower pricing structures, these are both empirical questions. So empirical questions that really can only be answered with research and that depend on a couple of things. It depends on the kinds of specific zoning reforms that are implemented, whether you're talking about allowing ADUs or eliminating single-family zoning or providing incentives for density like we do with the plan development process in Chicago. It also depends on the specific kinds of housing that's being built, whether you're building income eligible, sort of LIHTC, layer cake of financing kinds of affordable housing, or you're building market rate townhouses. It also depends on the specific kinds of neighborhoods where this new housing is, sort of hoped to be developed. Is there a lot of vacant land or developable land there? What are the income dynamics and demographic profiles of these places? So there's a lot of research out there, and those that adopt sort of appropriate statistical controls for things like policy, housing type, and geography have generated really different findings, some of them very contradictory, which I think underscores the importance of moving away from this idea that there are these kind of universal laws that govern all markets. So what I hope to contribute with my research is a kind of fourth contingency, and that is, and it's not something that has really been mentioned thus far, which is how the housing supply, both new and existing housing, is financed. So in my research, I've examined the financialization of the built environment, specifically how treating rental housing as a financial asset that is traded in distant markets has transformed markets in ways that complicate our understanding of the effects of new supply on affordability. So, a couple of provocations. One, zoning reforms may not increase housing production. Right? Developers want to build in the areas that developers have to want to build in areas that are targeted for zoning reforms. That means that a particular geography or submarket has to meet not just the developer's criteria for the economic viability of housing, like doing a kind of market analysis, but also investors' and lenders' financial feasibility criteria. In other words, buildings have to generate enough rental income that, net of operating expenses, they have enough left over at the end of the day to pay the mortgage on the project, plus meeting the return requirements of investors. So liberalizing zoning may not generate the rental income that developers are seeking unless they build a lot. And we also know that zoning is capitalized into land prices. So upzoning or changing the land use from industrial to residential, for example, can result in significantly higher land costs and therefore higher development costs. If average household incomes are too low or land prices are too high in a particular market, developers will look elsewhere, or they may try to fit very tall buildings on really small lots to make up for in volume what they can't make in per unit rents. And the logical conclusion would be, sort of forests of skinny skyscrapers instead of the sort of more incremental ramp up of ADUs or the sort of gentle density that I know that many people are talking about and are advocating for. A second provocation: more supply may not lower housing costs, at least not in the short run, or in areas that need it most. So zoning is a regulatory mantle that municipalities superimpose on a highly segregated and uneven landscape. This landscape has been produced by decades of racial discrimination, inequities in public services, lending and business location, and ethnic and racial co-location. So if you were to lift all sort of zoning regulations tomorrow, new housing would get built in those areas where there's sufficient and growing effective demand for it, like highly resourced or high-income neighborhoods like Lincoln Park, and the other areas where we see a lot of the sort of deconversions taking place. You might see tear downs of historic, these sort of stately single-family homes to be replaced by high-rises. But if you upzoned Englewood, which is a couple miles in this direction west, or Gage Park, 3 or 4 miles west and a little bit north, places where incomes are low and where there has been historically little developer interest, the sort of release the cranes approach would likely have less leverage. Without government subsidy, developers probably would not be able to charge the rents that are sufficient to pay off their development costs and also provide a profit. So would adding more high-end units in Lincoln Park lower prices in Lincoln Park? Probably a little. Would building more housing in Lincoln Park lower them in Gage Park? Probably not. Economists are generally sort of unspecific about the geography or markets that the sort of supply-demand relationships will sort of be articulated within. For rents of buildings to actually affect each other, they have to be part of the same market segment, either located near each other or rendered comparable by owners, renters, and importantly, appraisers. The segmented nature of urban housing prevents this process of filtering from occurring, the process that a lot of supply-siders say will be able to to provide more affordable housing by even providing high-end housing, that will eventually sort of trickle down from more affluent renters to less affluent renters, because too much supply will depress high-end rents so that people living in less expensive buildings can sort of move up. But in order for this process of filtering to occur, again, there needs to be some kind of legible connection between buildings, and the rents of higher-end units have to decrease. But instead of slashing rents, I've found, landlords often fix prices below which they will not rent, holding units vacant with the hope of eventually attracting higher-income tenants. Economists like to refer to this sort of resistance to sharp downward price movement as stickiness or sticky prices. Increasing supply will likely lead to the circulation of tenants within these different market segments, so within the sort of different strata of price points and rents, but not between them. So building a lot in Gage Park, which is 90% Latino, might actually decrease housing costs in Gage Park, and maybe even in Cicero, which is an inner-ring suburb, which is also majority Latino, and where a lot of folks leave Gage Park to move to. So it's important to understand sort of the way that these market segments are interlinked. Filtering depends on an ideal set of circumstances that occur only once in a while when specific at specific historical junctures and in specific places. So in New York City in the 1950s, there was a lot of documented filtering taking place because wages and living standards were increasing. And this is a period, 1950s, where there was obviously a lot of suburbanization in the region taking place, which allowed sort of working class households, including my grandparents and parents, to sort of move into units that had been vacated by out-migrants. A third provocation, that upzoning also removes barriers to financial speculation, which can actually increase rents. So assuming that increasing housing supply is going to dampen prices ignores a very important trend. So thanks to macroeconomic changes like historically low interest rates, heightened demand for financial instruments, and policy moves from wage to asset-based welfare, housing is now a significant vehicle for capital accumulation. We're familiar with this transformation among homeowners, which is why I stayed up late, obsessively checking Zillow to watch my house's, resale value, swan up and down, and as I considered borrowing against my anticipated future equity. But this sort of magnetic attraction of rental housing may be less familiar to those who are studying sort of smaller buildings and numbers of units. But for those that I'm looking at, again, over 50 units, these have become real sponges for global capital, mainly pension and sovereign wealth funds, insurance companies, asset managers sort of managing other people's capital, and private equity firms. who are looking to park their money in a reliable investment. In fact, multifamily is the third of the sort of three most favored asset classes since the beginning of the pandemic, when we began to see a little housing boom, maybe bubble, taking place in around the third quarter of 2020. So after industrial, warehouses, and life sciences, multifamily has become the sort of most popular sort of asset in which to sink this sort of giant pool of money. Investors are interested in multifamily not just because of the rents that are generated by tenants, which have increased at the fastest clip in the past 50 years, in the last year and a half, but also because of the mortgages that the building owners pay and that are often bundled and sold as commercial mortgage-backed securities. So institutional investors, REITs, private equity funds, they buy and sell these large, sort of over 50 units types of rental buildings that are just, sort of dispersed over a very wide geography. Is this a problem? Good. There's capital to buy and build these buildings. Many scholars, journalists, activists, including myself, have warned or have sounded some warning bells, because compared to the owners to the smaller landlords of 2 to 4 flats, investor-owned buildings tend to raise their rents faster and evict their tenants more quickly. They raise rents because of their acquisitions, particularly of increasingly expensive commodities, have been highly leveraged, and the mortgages in most cases have been securitized and sold to these sort of third parties. And in this sort of last boom bubble, again since the third quarter of 2020, returns from multifamily ownership have broken new records in terms of the profits that are being generated. But these profits are almost, directly at odds with tenants for rental income. So zoning can be a handmaiden to this process of financialization, or it can help to be a barrier to it. On one hand, restrictive zoning creates exclusivity in land use and bolsters the monopoly rents that we associate with particular locations. By providing some certainty about the nature of future development, zoning can minimize the risks of present-day investment that financial actors like. So we generally think about the real estate industry being opposed to zoning, but historically its members have convened to support important efforts at spatial coordination, like the fact that New York City's real estate board was instrumental in the 19-teens and getting the 1916 zoning ordinance in New York passed. And even Chicago's rezoning efforts in 2004 had the support of a lot of primarily sort of office and residential developers. Developers generally, when they talk about zoning, they want it to be liberal enough for them to build the buildings they want, but also restrictive enough to keep their competitors from following suit. At the same time, liberalizing zoning and allowing for, sort of unlimited housing production can create more opportunities for financial speculation. By maximizing the amount of rentable building space, developers ensure that each square foot is financially productive enough to justify their acquisition and construction costs. And historically, we have seen, I haven't really done the sort of statistical research to demonstrate this, but you do typically see, after there's been some kind of major zoning change or reform, like in Chicago's in 1957 and then rewritten in 2004, you often see the sort of skyline pushed higher, but also contributing to speculative bubbles like the one from 2007, 2008. Or more recently, taking a look at some of the data, we see that since the pandemic, the places that have the most sort of liberal zoning laws and have produced the most newest housing units also have the most sort of overpriced housing, I was looking at Moody's. So metro regions like Salt Lake City, Las Vegas, and Atlanta. So if the sort of laws of supply and demand were working in the way that we expect them to, you would expect that to be just the opposite. So one of the reasons for this perversion of the laws of supply and demand is that these are often new buildings that are the objects of speculation. and that command premium rents. Upward price movements encourage more investors and developers to enter the market, and it increase the pace of transaction activity. Driving acquisition prices higher, appraisers weight their estimates of value toward recent comparable sales, no matter how crazy the sales prices are. So a spate of new construction activity, particularly high-end housing, can push a market toward a new higher pricing structure rather than helping to equilibrate a previous one. So in conclusion, because I know we're almost out of time, I will just say that thinking that zoning reforms and density will solve the affordability problem fails to recognize one of its fundamental causes, that housing is also a financial commodity. What's driving prices up is not just an increase in occupant demand, but an increase in demand for housing from investors. If allowing more housing opens the floodgates for more profit-maximizing investors to enter particular markets, then the units that are likely to materialize may drag prices up instead of trickling down to those with more restricted budgets. And I'll stop here.
Thank you so much. We are going to be entering into a time of Q&A, and we're going to have a student who's going to have the microphone weaving through the crowd. But while I have it in my hand, I'm going to ask a quick question of Daniel. We've heard a lot about Minneapolis today and their reforms with single-family and multifamily housing. Is there a city that is providing kind of a North Star for ADU zoning and development? And if yes, what is it that they're doing differently that serves to kind of exemplify that model?
That's a really good question. I think the short answer is there is not a single city that we look to or looked to during the process, but there are a lot of examples. I mean, they tend to be on the West Coast of places that are sort of further along than we are. You know, I think one of the things that's interesting and challenging about it is our housing stock is so different from those cities in that most of those places are talking about single-family neighborhoods and much larger lots than we have in Chicago. And so they're talking primarily about, you know, coach house additions, as that's what an ADU means to them. Here in Chicago, 2/3 of our ADU applications are for garden or attic units in an existing building, right? That's sort of the bread and butter, as we've seen it so far, is in these older buildings that have sort of half basements that could easily be converted into an apartment. But I think one of the lessons that we have learned definitely from a whole suite of places that have done this before us is it is an iterative process, right? It is so specific to the built character that you're trying to sort of put ADUs into. It's so specific to the social and economic situation of the people who live there and the markets where that's happening that you're not going to get it 100% right the first time. And so I think we've definitely been looking at, you know, what are the things that we're learning about, like, how do you fine tune this for Chicago's housing stock?
Hey there. Thank you all so much. Can you hear me? So I'm really curious. I got from this panel that there are a lot of sort of things we assume about the market that are being disrupted by financialization. I found it very interesting that single-family homes are in many cases more profitable than multi-unit buildings, which is pretty disturbing. As someone who's trying to do organizing around renters and messaging some of these complicated questions and challenges to renters, can you maybe go a little further? I don't want to say oversimplify anything because I understand it's complicated, but maybe press a little further on some of those points that you were making about financialization and these sort of twisted market incentives that are leading to these situations where kind of very logical assumptions that you might make are not proving true in reality, and how you might explain that to an average renter who's saying, why is my rent going up and up and up and it doesn't make any sense to me?
Annie, is that directed to me? Yeah. You know, I do think that there is something to the kind of work that you do and many people in this room do in terms of tenant organizing, because I think when investors are often turned off when they see that, and that when you have a sort of active and coordinated tenant base, and who are sort of, challenging price hikes or sort of additional fees. And, either attempts to do that on a sort of building by building basis, or, when I'm interviewing developers, they're very scared of things like rent control, any kind of mass attempt to do this. And I'm not sure if that is necessarily going to be a huge sort of drag on this process that I described ever so briefly, but I do think that that's important, and it provides some maybe a buffer, and actually a buffer between investors and tenants, or the managers, right? The property managers who are sort of deliberately they're the representatives of the owners. But I do think being able to, to either to organize and to work in some fashion with the sort of property management companies is, kind of a way of expressing, that kind of a sense that the tenants may have, more power on a collective basis than they do on an individual one. Because otherwise, their rents will just be raised, and if they can't pay them, they'll find another tenant. May also be different depending on sort of the tightness of the market. What vacancy rates are doing. Obviously, I think tenants have more power when when there are higher vacancy rates, and developers and investors and property managers are more dependent on having people sort of occupy those spaces, and are more willing to negotiate and provide various kinds of concessions. In tighter markets, and sort of, both spatially and at different times, there's probably going to be that sort of balance of power shifts.
My question is for Daniel. First of all, I love that the picture behind you is that of $2.5 million homes that are single family, and we're talking about equity and zoning. One of the things that really upset me from one of the ordinances that you provided information on, it's just that it's not a factual basis to say that we had a demolition problem in some of the communities. And in some of the slides that were shown, they show that the vast majority of demolitions and deconversions were happening in Lakeview and Lincoln Park and whatnot. And yet the ordinance that was written that went to the 606 and to Pilsen, to say that there was 0 deconversions, there's no context to that information as to how many deconversions or demolitions there were in the years previous. And so we are, in the ordinance that was passed, really went after and affected elderly minority owners more than anybody else. And so if we're going to talk about equity and make sure that it's accessible to everyone, you are pushing a narrative or pushing a law, really, that affects minority owners, long-term owners, as one of the slides that Jeff showed. And so I don't see how that's fair. I don't see how we should be passing ordinances that affect one neighborhood that maybe doesn't have the means to fight back. But you are not pushing for those ordinances to be across the entire city. You are further pushing a disparity that says we need to have affordable housing in those neighborhoods over there. And so I find it very disingenuous to talk about, we're going to save these communities, but you're not doing anything in the areas where there is actual loss of housing, demolitions or units. And so moving forward, I've been very passionate about this in the city council and with my aldermen, is that these ordinances do nothing to actually help the people that you're claiming to want to help. To say that there was 0 deconversions, how many were there in the year before that? There was 1. In the year before that, the same information that Stephen can provide will show that. The number of demolitions in Pilsen, for example, were very low. There were 5 demolitions on one block of Lincoln Park, but there were 5 in an entire neighborhood that is Pilsen, 10 in an area that was a 606. So I believe in more housing. I believe in more equity for everybody and in all these communities. But it just seems like we're pushing something that says, we're going to do this over there. Let's try it out in that neighborhood, but not in the areas where there's actual loss of housing. And so my question is this an ordinance, this demolition ordinance that you have and the deconversion ones that have been passed, are you pushing for that to be across the entire city of Chicago so that it is an equitable distribution of zoning laws?
Thanks for that. I think the first thing that I want to say is that these ordinances genuinely came from organizing within these communities. Groups like Logan Square Neighborhood Association, groups working with the aldermen in Pilsen, this was something that was brought to us as, number one, as an issue, and number two, even the specific policies to address it, like the demolition surcharge, came from these communities. Now, I don't want to say that means that there is 100% agreement across the board, because obviously there isn't, and we're fully very much aware of that. But we do, one of the reasons this went through is because there was so much buy-in in these places that people who lived there said, this is something that is threatening us and threatening our neighbors, and we want to see something done about it. To some of your questions, I don't have the exact number. I know that there were, particularly in the 606 area, dozens and dozens of deconversions and lost 2 to 4 unit buildings in the years prior to the establishment of the ordinance. I think there were somewhat fewer in Pilsen, partly because it is just earlier in the gentrification process than the area around the 606. But I think part of the logic is we don't want to wait for it to get really bad and then 5 years later say, okay, we did something, right? But that said, there are places like Lakeview, like North Center, that are also seeing this problem. I think one reason that we focused on the 606 in Pilsen is those are areas that they are certainly not homogeneously low income at this point. I mean, the western edge of the 606 is actually quite high income at this point. But there still are large numbers of lower income renters, right, to protect against displacement, which is not quite true to the same extent in places like North Center, right, or Lakeview. Although, there are, that's not to say there are none. But I think, your larger point that we should not only be creating or pursuing policies that create affordable housing or preserve affordable housing in certain parts of the city is 1,000% correct and is core to how this Department of Housing has pursued housing policy. So, in our largest production program, affordable housing production program, which is our low-income housing tax credit program, we do about 1,000 units a year. We did a racial equity impact assessment on that one of the major things was, hey, guess what? For the last 25 years or more, we have been overwhelmingly building LIHTC buildings in lower income majority Black and brown neighborhoods, right? That's not acceptable. We also need them in Lincoln Park and Lakeview and North Center and so on. And the rounds of housing that we've come out with in the last 2 rounds, most recent one being in December, have been much more equitably spread across the city. And then there's, things like the amendment of the Affordable Requirements Ordinance, which is very much targeted at that inclusionary housing, piggybacking off of market rate development, requiring that there to be, affordable and deeply affordable housing in those developments, overwhelmingly in sort of the central area, north and northwest side. And then, examples like, I think it was mentioned earlier today, the Glenstar development on the far northwest side in an area that truly has effectively zero legally restricted affordable housing. We were extremely supportive of a zoning change that allowed that building to go forward with 60 units of affordable housing in it. That is truly some of the first affordable housing ever in that neighborhood, which is very much majority white and high income. And so, I 1,000% agree with that. And I think that's been really core to how we've tried to enact policy here.
So over here, just 2-part question. First for Daniel, going off of the previous conversation. Going along with that, what is the appetite for more of those deconversion laws that we saw in Pilsen and around the 606 and other neighborhoods of the city? So to that point, you mentioned like Lincoln Park and Lakeview, where a lot of those teardowns are happening. Are there any efforts to put deconversion laws in place there? And then a second question for Professor Weber. As you talked about Sunbelt cities and a lot of the institutional capital that's getting put into those, so like Las Vegas, Salt Lake, Phoenix, et cetera, part of that reason I think that there's all that capital going there is obviously the demand is going so high there. So I can think of a situation potentially where a lot of those buildings weren't getting put up. A lot of that capital wasn't going there. And due to that demand, the housing prices would actually go up even higher potentially. And I think about what's happened in Minneapolis, and you can see from some of that data that the rents have, since all of those efforts there, the rents may have gone down a little bit. So I just wanted to get your response to kind of the demand part of it and what would have happened if those buildings didn't go up. Sorry, I'll start with Daniel first. Sorry.
Sure, I can answer really briefly, which is yeah, I mean, we've certainly heard interest from some from folks around the city. In that, as we've said, and as you saw in the data, 606 and Pilsen are not the only places experiencing this problem. So, now that we have a year's worth of data to say, like, hey, this worked at what it was meant to do, I think, we're certainly interested in having conversations with whoever is sort of interested in looking at it in their community.
Yeah, in terms of the demand, that obviously it's not just supply and it's not just investors, sort of throwing capital at particular markets, but those are the places, the Sunbelt cities that we hear that, people are moving to from, Rust Belt or from the sort of upper Midwest. The data that I was referring to when sort of talking about sort of an overpriced market, Moody's does this thing where they sort of calculate what they think, how single family home should be worth, the multifamily apartment should be worth based on that increase in demand. So they even taking into account the increased demand, they then sort of rank cities on the basis of which they calculate are sort of the most quote unquote overpriced relative to the fundamentals. So even taking into account that sort of increased demand, there's a general feeling among sort of housing price observers that these are places that have sort of gone above that. Even again sort of accounting for the increase in population and relocation from other places to those parts of the country.